Hey everybody, Abdullah Shamari here with you. Today we'll be concluding our video on SPACs. We'll be going over why SPACs are a great investment opportunity, some FAQs, and finally SPACs that I recommend to have in your portfolio based on the SPACs management team, prior history of closing deals, the sector they are focusing on for their potential target, and finally, if they have identified a target, evaluating the investor deck that they presented as well as the target company that they'll be reverse merging with. If you haven't subscribed to my page, make sure to hit that subscribe button below, crush the like button so as many people can see these videos as possible, and leave a comment with your thoughts, whether you agree or disagree. Additionally, please sign up for my Patreon. I try to pump out videos throughout the week. However, I'm just not able to get as much content out there as I would like. Patreon gives you live updates as far as my watch list, my portfolio, live updates on my daily readings and different research that I've done, and finally insight into my stock buys and sells as they're happening each day. So now we'll move on to why you should invest in a SPAC. So SPACs are a great opportunity to invest in the company in its initial stages. One of the biggest benefits is limited downside prior to the merger. It can't go less than $10. If you invest in a SPAC and it's just went IPO and they haven't identified a target, that the downside is only $10. The book value of the SPAC is $10. So it will not go under $10. And you're guaranteed if over 2 years that the SPAC doesn't find a target, you'll get that $10 back plus interest. But on the other side, there's high reward because you're buying at a near $10 per share value if you buy the SPAC and right when it goes IPO, and you're getting a similar deal to the actual sponsor of the SPAC. A great example is IPOD. It's a SPAC that I bought. Social Capital is the sponsor of that SPAC. I bought it near $10. Chamath, who is the lead of Social Capital, he's put his own personal money in it. So I'm getting a similar deal to what Chamath is getting. Obviously, he's making a little bit of fee because he's actual sponsor. He has to go and do work, find the target, get them through the reverse merger, be able to go through the due diligence, get the auditors squared away, etc. However, I'm getting a similar deal to him. He has skin in the game. He wants the company to do well, and in a similar fashion, I'm going to do well if he does well. So you need to research to make sure that the sponsor, in most cases, has skin in the game and they actually want the company that's being reverse merged or the target company to actually succeed. Second thing is, second question that some individuals have about SPACs and if you should invest or not is, what's the difference between warrants and shares? So the warrants are, which we explained in the last video, are just the ability to buy a share of a SPAC or the company at $11.50. You're able to exercise it, and then you're able to then get a share of the company. So if the shares are trading for above $11.50, you're going to want to exercise that warrant. Whereas if they're trading below $11, the shares are trading below $11.50, you're not going to want to exercise that warrant. The warrants usually are sold at a lower dollar value. So the warrants usually, when it goes IPO, they're trading for less than $3 versus the actual SPAC is trading at $10. So you're able to gain a little bit of leverage. But again, you don't own the actual shares. You have the right to own a potential share. So some people buy the warrants to be able to get even more exposure to the SPAC. Another question people have sometimes about investing in SPACs is the cost of a SPAC reverse merger versus a regular IPO. IPOs are very expensive. So a SPAC gives companies the ability to do a reverse merger with less costs, and they'll have to maybe they'll have to give up a little bit more equity in these cases. SPACs are much quicker than what a typical IPO would take. IPOs take sometimes years, depending on the financials of the company and the timing of the IPO, etc. SPACs are a way where companies can go public much quicker. And the last thing is less burden on the company to go public via SPAC instead of reverse merger. However, they still go through the same scrutiny that they would if they were to go through an audit. Last question we'll be going through is a question everybody has. How do you keep track of all these SPACs? There's so many of them getting pumped out. over last year, and now even more so this year. There's mergers and pre-mergers, and when they identify a target, and when they ask shareholder approval, and then when the stock ticker changes, and then they eventually go public and they become another ticker. How do you keep track of all these things? So this is a great website that I found recently. It's called SPACtrack.net, and it basically is a resource for SPACs. It has ability to check out all active SPAC lists. You can check it out based off of where they're at in the SPAC process, whether it's pre-IPO, searching, in talks, unconfirmed. They've signed a letter of intention. They signed a definitive agreement. They just did their registration. They just went IPO. They just split, or they're pre-unit split, so they're still trading in units. So an example of that we'll give later in one of my recommendations. They recently split the unit into the warrants and the shares. So this is a great resource. It gives you the list of all these SPACs and where they're at in the process. So it gives you the ability to look at their management, be able to look at a lot of different facts about the SPAC. So here, let's quickly go into the website and be able to kind of look at what we're able to see and what kind of information we can get. So we'll go to this full list of active SPACs. And then let's just go to pre-IPO. And then we can see here, it talks about the SPAC, what the status of the SPAC is. It talks about the leadership, what the value of the SPAC is. It talks about the warrants. It talks about the size of the IPO, which banks they're working with, and even links to the SEC filing. So this is a great resource to be able to get all the information you want about SPACs and just keep track of these things. There's so many of them. In many cases, sometimes you just don't know what's out there and you're not able to invest. So this is a great resource to be able to look through, and we'll make sure to use it here in future videos when we're going through various SPACs. So the next thing we want to go through is what my recommendations are for SPACs currently. Of all the SPACs that are out there, what do I recommend? What am I investing in? So here I'll be recommending 5 different SPACs. They're in various stages of the process, but we'll go through each of them. We won't go through significant detail. I'll try to have additional videos where we'll go through detail, especially if they have targets, etc., so that you all will have the insight. But you are more than welcome to go and do your research, and then reach out for questions. And if you want further information, make sure to sign up for the Patreon to be able to get additional details and ask more questions. So the first recommendation that I have is SVFA, or this is the SPAC for SoftBank. They just launched this. SoftBank is obviously a bank that's invested in many different startups over the years. So this is one that I think is prominent, similar to Bill Ackman's PSTH, which is another SPAC that's prominent and is looking for a large target. So in a similar sense, SoftBank, I think they've proven track record of working with startup companies. So this is a SPAC that I've invested in. They haven't identified a target, and it could take 2 years, but I think it'll be well worth it once they find a target. The second one is RMG Acquisition Corporation, RMGBU. In this case, RMGBU, they had done a previous SPAC, and that's why you see number 2. They already did one, and they reverse merged with Romeo Power. And Romeo Power has been doing well. It's trading over $20, and obviously the SPAC started at $10, so it's almost more than doubled at this point. So trust the management. They're able to execute, and they're able to find targets in a quick fashion, and also be able to succeed after the reverse merger. So this is another one that I recommend. Next SPAC I recommend is CFII, or CF Finance Acquisition Corp. Again, it's a second iteration of a SPAC for this management group, so we know they can close deals. In this specific instance, they're reverse merging with View Inc., which manufactures windows for real estate throughout the United States. However, these windows are unique in that they use artificial intelligence in order to be able to manufacture them, and also as they're installed using artificial intelligence, these mirrors or windows are more effective as far as for the climate and renewable energy, etc. So it's a better product compared to what is currently being installed in real estate throughout the country. The company's currently generated 35 million in revenue, so it's just starting up, but the ability that they have to be able to continue to grow is tremendous because they're already in all the markets throughout the United States and they're already generating revenue. It's just about getting the needed funds in order to be able to scale. The next recommendation is AJAX. I can't recommend this enough. They have huge potential with the management company that they have. We have another YouTube video that discusses this specific SPAC. So this is one that you should definitely have in your portfolio. Make sure to invest in it and keep investing in it. It's currently pretty low at $11.71. I got in at about an average $12 and will continue to invest in the SPAC as they'll be able to get a big target with the management company that they have and the connections they have with former members of Square, Instagram, as well as individuals that worked at Goldman Sachs. The last recommendation that I have is DPCM Capital Inc. This one specifically because of the involvement of Eric Schmidt, who is the former CEO of Google, as well as a former executive of Uber as well. So again, key management people in this SPAC, another potential one, and this one's even trading under $11 currently. So I believe this one again will do really well. They'll be able to find a target. Ones that I've recommended in the past, obviously IPOD and IPOF. I recommend those still, even though they've run up quite a bit. Chamath has shown that he's able to execute on deals, and then his SPACs still do really well even after that. So these are the recommendations that I have. Make sure to include these in your portfolio. Let me know if you agree or disagree. If you have further questions, make sure to comment. As always, make money, enjoy life. Peace.